Well, hello, friends. Welcome to today's live Love Up conversation. Whether you're tuning in live or catching me on replay, happy Thursday. Let's dive right in.
And now, get ready. I present to you Level Up with Winnie Sun. Market updates. Award-winning financial pro. Welcome to Level Up with Winnie Sun.
Well, hello, friends. Hello. Welcome to the show. If you're brand new to the show, it's great to be here with you. If you're returning, thank you so much for making the time. It's wonderful to have you back. I'm Winnie, your host, an award-winning financial pro, Forbes contributor, and a CNBC council member and contributor. And it is wonderful to be joining with you on this beautiful Thursday. We are certainly live on a whole bunch of different platforms. The market has just closed. For those of you who haven't chance to take a look, let me just tell you, today was a good day on the markets, green across the board. Dow closed up 124 points here. NASDAQ up 209. We will take that all day long. S&P 500 also in the positive, up 31 points. A lot of news has been occurring today as well as the entire week, in fact. But if you didn't know already, the Fed did announce a cut in interest rates. This was reported by many different financial publications, including CNBC, with Jeff Cox talking about how the Federal Reserve has lowered interest rates by 0.25%, setting the federal funds rate now to be between 4 to 4.25%. Now, we do know that officials have now not only cut rates, but they also said, well, they're going to keep them coming. They think that 2 more rate cuts are likely for this year in 2025. Reflecting sort of concern about the slowing job market here in the United States, despite the fact that we've still continued to see elevated inflation. Now, the decision did pass a vote of 11-1. There was one person who dissented and actually was really trying to go for a full, deeper half cut instead of just a quarter cut. But nonetheless, Fed Chairman Jerome Powell described the move sort of as risk management, meant to balance rising downside risks to employment with inflation pressures. Now, of course, the Fed's dot plot projections show that both October and December are going to be months that we could possibly see rate cuts with sort of a wide range of views among different policymakers. And I think some of that is what you're seeing today of the positive across the board, showing that, the Fed is definitely open to cuts, perhaps more. And projections for growth did sort of tick slightly higher, while unemployment and inflation outlook still sort of kind of looks steady. So overall, I think this is a good move. I think this gives us some hope that, perhaps inflation will start to get better, but I don't know that it's going to be anytime soon. But nonetheless, for those who have been on the sidelines waiting to purchase a new home, waiting to refinance, perhaps owing a lot of money on credit cards, hoping that rates get lower, people who own businesses, small businesses, in fact, that need business loans, this actually could ease some of the borrowing risk for those individuals if the Fed continues to cut rates. However, nonetheless, investors should expect ongoing volatility because the Fed, as we know, is trying to balance inflation risk with softening job market results as well. And if you talk to anybody these days who's looking for a job, who's just out of college, there's definitely not as much opportunity. I've been talking to so many people. In fact, so many people that I know personally have been asking me, do you know anybody who's hiring? I've sent my resume 100 different places and I don't even get a phone call. I mean, that's a harsh reality. A lot of people are struggling right now. Now, speaking of something that's also shocking and big news, if you didn't know already, this actually hit news all over today, talking about the FCC. I'm reporting, sharing the news coming from CNBC, and what they wrote, Dan Mangan wrote about FCC Chairman Brendan Carr, has officially criticized Jimmy Kimmel for allegedly misleading the public about the killing of conservative activist Charlie Kirk. You can actually see Jimmy Kimmel's comments, I think, is being shared on many different social media platforms, but they're saying that these comments were linked the suspected killer Tyler Robinson to the MAGA movement, that they feel that contradicted by court documents that show that Robinson actually leaned politically left. So ABC has officially suspended Jimmy Kimmel Live indefinitely following backlash. And there's now the potential threat by the FCC against the network and Disney as well. Now, if you're following this on social media, I was actually kind of watching and reading some of this stuff being shared online. I mean, you're really getting strong feelings from both sides of the aisle. And many people are, of course, disappointed. Jimmy Kimmel, obviously extremely popular in nighttime entertainment on television. But that being said, the officials are saying that the issue is not a joke, labeling one of the most significant political events in recent times. So yeah. So Next Star Media Group, which owns about 10% of ABC affiliates, they actually were the ones who decided to pull Jimmy Kimmel's show, and amongst a lot of regulatory concerns. So I'm curious to see how you feel about this. Do you feel like this was reasonable? Do you feel like it's unreasonable? It's happening one way or the other, but I will say that a lot of people are sharing their feelings on social media. And I think if you have an opinion on this and you feel comfortable to do so, you could, I guess you could make your voice heard as well. But I will say that I was very, very surprised by this news. I'm just curious to see how you all feel on that. But that being said, let's continue, because I want to talk about additional concerns that is also being shared by Fed Chairman Jerome Powell. This is being shared on Fortune this week, talking about how Fed Chairman Jerome Powell acknowledged concerns that the artificial intelligence boom shows signs of a bubble. Yeah, believe it or not, I mean, everybody's talking about it being the second big industrial revolution, and we're still not even close to the halfway point. So, still very early in the AI journey here. But Fed Chairman Jerome Powell is now also talking about a bubble. I didn't expect that. But saying how capital spending on artificial intelligence could reach $3 trillion by the year of 2028, which is also the year of the U.S. Olympics, or I shouldn't say the International Olympics, I should say. But it's, of course, the AI spending, of course, is benefiting a handful of very big tech names. But of course, now there's concern of whether or not it's reaching a bubble. Job growth, of course, has slowed dramatically, with only 22,000 new positions which were added in August of this year. Unemployment is now edging 4.3%. If this continues, and we know that as AI advances and improves, there's going to be continued impact on the job market, hiring, and also what young people are going to be studying and needing to be able to stay viable for employment and for be able to support their families and themselves, right, in terms of income. But yeah, so they're definitely seeing a lot of struggles and sort of that low hiring environment. Of course, GDP still remains above 1.5%, but nonetheless, they're now talking about a potential AI bubble. So just something to keep on your radar if this is something that you have an interest in, or something that you use, or even if you have someone young at home who's looking for, maybe in college or has just graduated and thinking about what they're going to do for a living. Well, I think these trends are really important to be paying attention to those shifts today, for sure. Yeah. And speaking of shifts, this is another big one. This is being reported by CNBC, being a big shift that's being shared also by the Trump administration. The Trump administration has proposed moving companies from quarterly to semi-annual reports, saying that this move could help executives focus on longer-term strategies for their companies. Now, Treasury Secretary Scott Bessent said that this change could reduce reporting costs for companies while still giving investors meaningful updates. So, for example, if you own such and such stock, right, or other type of investment, typically you would get a quarterly report of a publicly traded company showing the financials of that company on a quarterly basis. So this move is a suggestion of, instead of being quarterly, that it moves to just twice a year. Now, they're saying that many global markets already use sort of a 6-month reporting cycle, including the UK and the EU, with companies allowed to share updates more often if they choose to do so. But they're saying that this change could make the US market even more attractive for foreign firms considering listing their companies here in the United States. So, nonetheless, this would be a big move. So let me know how you feel about that. I know many of you invest and many of you own stocks, bonds, mutual funds, and whatnot. How do you feel about that? Do you feel like quarter reports are beneficial to you when making an investment decision? Or do you feel like, you know what? That makes sense. 6 months, long term, that's what most financial professionals will tell you. I'm a big fan of long term investing. So, what do you think about that? I'm just curious to see your thoughts on that. I think that's one that depend. I mean, I guess it depends. It could depend on how active you are in terms of investing as well. If you prefer like that quarterly bit of information, but everybody's different. So your thoughts are important on that as well. Now, speaking of that, I want to talk about another thing that they're planning to do as it pertains to investing, because the SEC is now opening the door also for another change. This is being reported by Reuters this week. The SEC voted 3-1 along party lines to let companies who are thinking about going public require disputes with investors to be settled through arbitration instead of class action lawsuits. Now, if you've ever owned any stock or even bond or whatnot, you probably experienced some sort of mailing about a class action lawsuit. This is certainly not new, but this sort of this overturns a long-standing SEC policy that had blocked IPOs from such provisions in their bylaws. Now, many Republicans and corporations are arguing that the move cuts down on frivolous lawsuits and lowers the cost for companies. And then on the other side, investors and Democrats are advocating, warning that it actually weakens shareholder rights, as they're saying, well, many small investors just won't be able to pursue costly individual arbitration cases. And that's why the class action suits works for them. So again, something depending on how you feel, depending what type of investor you are, depending whether you own these companies that are, if you own a company that is public or about to go public, versus if you're a small investor or if you're an institutional investor, a larger investor. I think all of those will come to play depending on where you are with that. I don't think that's a clear answer, but that was a decision that has been made. So that's what that is. So another big one, if you're investing, to pay attention to. Now, let's continue on, because I want to talk about something that's come out of Google this week as well. This is a big one for Google and artificial intelligence. Reporting by NPR this week, talking about how the federal judge ruled that Google must right away end exclusive search engine deals and share some of their search data. But they are allowed for Google to keep Chrome, so that's a good thing, and their financial partnerships. But of course, it's raising questions about the effectiveness of these penalties, because the Justice Department has now aimed for harsher remedies, including breaking off Chrome from Google and banning all preferential deals, arguing that Google's dominance actually distorts competition. But Judge Mehta acknowledged, though, although the tech shift towards AI, that there is now this big shift, and trying to avoid sort of stifling innovation, he says that he had to sort of try to gaze into a crystal ball to predict really how AI would evolve. But critics are arguing that the ruling is way too lenient, warning Google's search data advantage is a big one, and it gives a major head start into the generative AI race here, which we know is a key feature battleground for anybody and every company that's involved in artificial intelligence. So Google's Gemini AI is increasingly integrated into search, competing with companies that such as ChatGPT and many other search engines, in fact. So that's what has happened there with Google. So I guess it depends on how you feel about that. But I'm sure Google is happy with that news. Now, speaking of big news, here's another one that I'm really curious to see how you feel about this. I guess this could be seen as, it's one of those nostalgic brands we need to talk about. This is being shared from the New York Times. Now, when's the last time you had ice cream? And when's the last time you had Ben and Jerry's ice cream? Well, this is a big deal. I didn't even know. This is an iconic brand, right? I'm sure many of you, I know when I was in high school, this was like the big thing. Ben and Jerry's ice cream is so delicious. Everybody loves it. And they have this really colorful branding, and it's just very nostalgic, and it just seems so happy, right? Well, get this. So Jerry from Ben and Jerry's full name is Jerry Greenfield. In fact, is resigning after a whopping 47 years at the company, saying that the company's activism has been silenced under Unilever's control. He said that the independence promised when Unilever bought the brand in 2000 is completely gone, despite an agreement for an independent board to safeguard their social missions. Now, I don't know if you've had a chance recently to pick up a Ben and Jerry's ice cream carton, but for many years, I think they had different messages, like positivity messages and what they believed in. And they were really big about standing up for justice, equity, humanity, and they think that now is more important than ever to be standing up for these things. And Ben and Jerry's is now sidelined to avoid upsetting those in power. The ice cream maker has clashed with Unilever before. They've even had lawsuits over board independence and disputes about speaking on issues such as Gaza, in fact. And in 2021, Ben and Jerry's even stopped sales in certain territories, calling it inconsistent with its values. So again, some people are on social media, I've been seeing say very clearly, like, well, like ice cream should stick to ice cream, and politics should stick to politics. But you're seeing a brand which has embraced sort of their social mission with ice cream and what they create. And so there you go. Ben of Ben and Jerry's is currently still with the brand. Jerry's is now out, which hopefully hopefully doesn't impact the cost as well as the taste. Most important, the taste of the ice cream. But let me know how you feel about it. Do you feel like brands should stand up for how they feel in terms of their mission? Do they feel like they should have a voice about what they feel about social missions as well, or should you just stick to ice cream? I think that's a big one, and I think a lot of people on social media have been talking about this, what that means. But it wasn't that long ago where we were told, especially those of us create content like I am doing right now, talking about not only business, but also giving a glimpse of things that matter to us personally or our preferences, and really sort of making that 360 experience between you and your audience. But this is one situation where they just feel like they couldn't with this very iconic ice cream brand. So yeah, unfortunately, that's the case. Well, my last story I want to share with you is one I think that's really important. And if it impacts you or applies to you, it's one I want to make sure that is on your radar. And this comes from CNBC, Kate Dory. A great one. In fact, if this applies to you, definitely check out the article. It's talking about the recent changes to the capital gains tax. Okay. Under the Trump administration's 2025 tax law, more Americans are going to qualify for the 0% capital gains rate. This is a big thing. When you buy a stock or security at a certain price, it may be lower, and then you sell it at a higher price. Well, the gains that you have is typically taxable as capital gains tax. Now they're changing that, and that thresholds set are now, if you file individually your taxes, if you're earning less than $48,350, if you file jointly, if you make less than $96,700, well, now you have the opportunity to perhaps not pay any capital gains tax. The expanded deductions, including a $6,000 break for older Americans, make this sort of a golden opportunity to sell appreciated assets tax-free. Experts are saying this 0% bracket enables for people to do tax gain harvesting, a strategy where many investors sell profitable assets during sort of low income years without triggering taxes. Now, this is really important. If you have a family member in your life, maybe, grandparents or parents who don't have much income, but maybe they have investments and stocks from a long time ago that they could use the liquidity. Like, I'll give you an example. Recently, I spoke to a client. They had highly appreciated stock that they bought many, many years ago that went up significantly. But now, because of older age, they're looking at possibly having to go into a retirement community that's very expensive. Now, if they sold the stock, typically that would also mean lots and lots of taxes. Now, in this situation, since they have lower taxes, well, they could potentially sell a considerable amount of their stock and not have to pay capital gains tax. Again, if you're going to do this, you definitely don't do this by just listening to this and deciding you're going to do this. You definitely want to speak to your tax professional, go through this in detail, have them confirm, and make sure that you qualify for this sort of advantageous capital gains treatment, and then decide together with your tax professional, your financial professional, and then make sure you do everything right and it makes sense for you. So this is sort of ideal for trimming those concentrated stock positions and helping people who want to rebalance portfolios, or maybe they need liquidity, right? In my example of like for a retirement community, those are all things that need careful planning if you're going to do this, especially for those with legacy goals, or if you're thinking about helping to plan for your heirs or your kids or grandkids. So the window could be temporary. So it's really important to pay attention to this. And if you think that you might benefit from this, to sort of take action before the end of the year, I say the sooner the better. And just make sure you have all your information. Doesn't mean that it's going to stop at the end of the year. We don't know that yet, but it's a good idea to at least see what your scenario is, so that you make sure that you don't miss out on any potential benefits for yourself. And with that, well, the market already closed before we even start. So you know what the market closed at. Do me a favor, hit that like and subscribe to stay updated on all the latest updates. Thanks so much for making the time and always joining me each and every week. It is a treat to be here with you, and I'm honored to have this show with all of you as well. And for those of you who have been sharing the show online, I see it, and thank you so much. I taught so many last week. When you share the show, definitely tag at Winnie Sun so I can see them. Thank you so much for making the time. And if you want to catch full episodes, past episodes of Level Up with Winnie Sun, you can check out NASDAQ, Amazon Fire, Samsung, LG, Roku, and of course, many of the streaming platforms as well. Thank you so much. Have a wonderful week, and I'll see you again very soon. Take care now. Bye-bye.